Hello and welcome to the weekly market metrics. I'm your host Sandeep Rao. We're already in week 43 of the year. Can you believe that? Just 9 weeks left in 2025. Just the right time to start writing down all that you would like to accomplish in 2026, just the way you did in 2025. Anyways, let's get back to business. Time for our weekly dose of market metrics. Oh, I hope you all had a fantastic Diwali week. I did. And as always, I traded on Muhurat as well. Now, on the Hindu New Year's Day, there was a tweet from Prime Minister Modi addressing DJT, thanking President Trump for his phone call and warm Diwali greetings, and expressing hope that the two great democracies would continue to illuminate the world with hope and stand united against terrorism in all its forms. Now, that was the tweet. Maybe that had something to do with the 400 plus point rally in GIFT Nifty on our Hindu New Year's Day, even though the markets were closed. But when Nifty finally opened on Thursday, it gapped up only 189 points and then got sold off from around 26,100 all the way down till 25,718 till Friday. So yeah, bulls, including me, were indeed dreaming of an all-time high, but that dream did not last and reality came biting. Let's get started with the charts and indexes. Starting, of course, with everyone's favorite Nifty Weekly. So after nearly 15 weeks of consolidation, Nifty finally seemed to be showing some action. This week's candle, a bearish doji. For those who don't speak fluent candlestick, that's a bearish reversal pattern. It usually comes up after an uptrend, but what it tells us is pretty interesting. Buyers tried to push prices higher during the week, but by the end, sellers took control and dragged it right back down near last week's close levels. Now, before anyone jumps into conclusions, remember, just one doji candle alone doesn't make a trend. The real story comes from the next candle. That's when we get a follow-through confirmation. So next week, we'll be watching closely to see if we actually get a reversal from 21,600 levels and if bulls still have some fight left in them. This week, Nifty moved up by 85 points, closing at 25,795, which is about 0.33% gain from last Friday's close. As we discussed last week, resistance still sits around the 26,200 to 26,300 zone. That's the all-time high area. But a new minor resistance seems to be forming at 26,100, this week's high. On the flip side, support is holding steady at 25,670 level. So for now, Nifties are still range-bound, but that doji is keeping me a bit puzzled. Looking at the daily charts, Nifty printed 3 red candles this week, including the Muhurat trading day, and just 1 green candle on Monday. The resistance and support zones remain the same as on the weekly chart, 26,100 and 26,277 on the upside and 25,670 as support. As we discussed last week, we were expecting a short-term pullback towards 25,670 zone, and that's exactly what started playing out from Thursday into Friday, with Nifty hitting a low of 25,718. From the week's high at 26,104, we've seen about 386 point or roughly 1.5% drop, confirming that the market's taking a bit of a breather over here. Something I had pointed out last week as well. Moving to the hourly time frame, Nifty has comfortably held above the 50 EMA throughout this week. It's now been 10 calendar days or 7 trading sessions since Nifty last dipped below that level. And during this stretch, the index has roughly added close to 600 points. However, with this recent pullback, the price is now catching up to the EMA, which itself has been gradually rising. Right now, the gap between the price and the EMA is around 125 points or roughly 0.5%. The big question for next week is, will the price test and possibly breach that 50 EMA, or will EMA hold strong as support once again? Only time will tell. Now, talking about intraday versus overnight moves in Nifty this week, the pattern was pretty clear. The index moved up overnight but gave up nearly all those gains during intraday trading. For the week, the overnight move came in at around plus 1.12%, while intraday move was minus 1.23%. Looking at 2025 year-to-date, Nifty has gained about 9.2% overnight, but only 1.14% intraday, showing that most of the upside so far this year has actually come outside of regular trading hours. Moving to Bank Nifty on the weekly time frame, after hitting a new all-time high last week, Bank Nifty also formed a shooting star candle, hinting at a possible reversal or consolidation in the coming sessions. It could also be a sign of some profit booking at higher levels before the index decides whether to continue its rally on the upside. For the week, Bank Nifty closed almost flat, down 14 points from last Friday's close. On the levels front, resistance is now at this week's high near 58,600, while support sits around 57,600 zone. Looking at Bank Nifty on the daily time frame, the resistance and support zones remain largely the same as on the weekly charts, with resistance around 58,600 and support between 57,600 and 57,400. Just like Nifty, Bank Nifty also printed one green candle and three red candles this week, including the Muhurat trading day. To me, this looks more like a healthy pullback or a retest phase rather than a full-blown reversal. As long as those major support levels hold, the uptrend should remain intact. Looking at Bank Nifty on the hourly chart, the index is still trading above the 50 EMA. It's now been around 23 calendar days or 16 trading sessions, holding consistently above this level. On Friday, it briefly tested the EMA but managed to close back above it. During this entire stretch, Bank Nifty has gained nearly 2,800 points. As of Friday's close, it's still holding about 162 points above the 50 EMA, which translates to a roughly 0.28%, showing that the short-term trend remains bullish, at least for now. As we discussed in the past couple of videos, Nifty Mid-Select is still struggling to close above its major resistance level of 13,260. This week, the index touched a high of 13,336 but eventually closed at 13,165, which is only 4 points higher than last week's close. The resistance zone remains the same, which is 13,260, along with this week's high at 13,336, with immediate support near around 13,000 mark, which also happens to be a big round number and an important psychological level. On the daily time frame, Nifty Mid-Select had a tough week, with the last three sessions closing in red and only Monday managing to print a green candle. The resistance zones remains unchanged from the weekly chart, the first one around 13,266 followed by 13,336, which is this week's high, and then near 13,380. On the downside, supports are also similar to the weekly levels in the 1350 to 13,000 zone. Moving to SENSEX on the weekly time frame, the index gained 260 points or about 0.3% compared to last week's close. The structure looks quite similar to Nifty and Bank Nifty on the weekly chart. Resistance levels are seen near all-time high zone between 85,600 and 86,000, while support lies around 84,100 level. On a daily time frame, the Sensex is showing a pattern very similar to Nifty, with the price action reflecting a consolidation throughout this week. Resistance is seen around 86,300, which is this week's high, while support remains around 84,100, in line with the weekly levels. Moving to the rate of change, the 1 month to date performance across all major indices looks solid. It truly was a happy Diwali for the markets. On a week-to-date basis, the markets remained largely flat, with no major directional move. All key indices ended the week on a muted note. Looking at the year-to-date numbers, Bank Nifty continues to lead the pack with an impressive 13.5%, followed by Nifty at 9.1%. Meanwhile, Nifty Mid-Select is still lagging behind, up only 2% for the year. Clearly, all the momentum this year has been concentrated in the large cap indices like Nifty 50, while the mid and small caps have been taking a breather. Maybe this just isn't the year for mid caps. Who knows? We still have 2 more months to go. Let's see. Moving on to directional bias, even with the pullback we saw this week, the short and the medium-term directional bias remains positive across all major indices. That is, all the 4 indexes are above their 21 and 50-day period EMA on a daily time frame. Looking at the top performing sectors this week, Nifty IT clearly stood out, leading the pack with a 3% gain, showing up at the top after a week's break. Followed by PSU Bank at 2.3%, Metals at 1.45%, Media at 1.35%, and CPSE at 0.9%. All 5 sectors were new entrants to the top performers list this week. Talking about the range, expiries, and wicks, with the holiday on Wednesday, we only need to focus between the daily range and the daily range 3 columns for this week. On Monday, which was an expiry day for Nifty, recorded the lowest range of the week at 138 points, followed by Friday at 226 points. I'm not counting the Muhurat trading session highlighted under the daily range 2 column since it wasn't a full trading day. Sensex, on the other hand, followed much wider movement with the highest range coming on Thursday's expiry at 845 points, followed by a 750 point move on Friday. Overall, the range stayed pretty much in line with the average around 180 to 200 points, which also matches Nifty's 2DTE end of the day ATM straddle price hovering around 185 points. Now, talking about the Nifty expiry, it was relatively calm except for some volatility at the opening hour. The index dropped about 0.5% from the high till 9:50 am and then later fell another 113 points from the 1 pm high before finally closing 133 points or 0.5% above Friday's close. Sensex expiry, however, was a completely different story, anything but calm. After an initial volatility crush that hit options premium, the index saw a massive 1,000-point drop post 1:15 pm, with straddle prices less than 200 points in premium. Needless to say, it was a great day for option buyers or those who play long vol or gamma. But for the short vol players, it was an absolute bloodbath. Talking about India VIX, it stayed largely unchanged from last week, hovering around 11.6 levels, and the Nifty 2DT at the money ATM straddle premium closed near 185 points, roughly pricing in a 0.72% move on either side until expiry. Now let's look at commodity futures for the past week. After a relentless rally in the past few weeks, both gold and silver finally took a breather, slipping about 4.3% and 7.4% respectively this week. That said, the month-to-date performance for both the metals still remains positive, and their year-to-date returns continue to look spectacular when compared to equity indices. On the energy side, after a negative week earlier, it's making a comeback. Crude oil jumped 8%, while natural gas surged nearly 10% this week, though both still remain negative year to date. In summary, it looks like the market played a trick on us this week. We thought that we would make a new all-time high this week, but Nifty just couldn't hold on to those gains and failed to close strong. After 2 weeks in green, the Nifty closed just 0.33% above last week. There was a pullback across all major indices this week, with BANKNIFTY trading close to its previous all-time high. The IT sector showed solid strength leading the gainers, but the sell-off on Thursday and Friday raises the question, was this just a pullback or are we setting up for a deeper drawdown in the coming weeks? Let's hope this is just a healthy pullback before the next leg up, and maybe we'll see some fresh all-time high soon. Fingers crossed. Now let's move to what we can expect in the coming week. Next week marks the monthly expiry for all NSE F&O stocks and indices, including Nifty, BANKNIFTY and MIDCPNIFTY on Tuesday. So make sure to roll over your futures and options positions in time. For Nifty, the key levels to watch around expiry are 26,000 and 26,100. Those will be the battlegrounds between the bulls and the bears. Let's see if the bulls can finally push through or if the bears manage to keep it capped below 26,000. SENSEX monthly expiry is coming up on Thursday, the 30th of October, and with that, the next week will also mark the end of the month. We also have the US Fed interest rate decision coming out on Wednesday at 11:30 p.m. IST, so don't be surprised if we see a bit of volatility in Thursday's session. And that's pretty much for this week, and have a nice weekend. And yes, don't forget to subscribe to this channel, and see you soon.